Welcome to this video on supply concepts under GST law. This video explores the fundamental principles that form the foundation of the goods and services tax. Under GST, the concept of supply is the primary trigger for tax liability. Unlike older tax systems that focused on manufacture or sale, GST looks specifically at whether a supply has taken place. GST identifies 6 distinct categories of supply, which help determine how transactions are treated under the law. It is important to distinguish between composite and mixed supplies. Composite supplies are bundled naturally, with the principal rate applying. Mixed supplies are bundled artificially, and the highest tax rate is applied. Continuous supply occurs when goods or services are provided repeatedly under a contract, such as a petroleum company delivering daily fuel shipments. Exempt supplies, like certain goods at a nil rate, do not allow for input tax credit claims. Conversely, zero-rated supplies, which include exports, allow businesses to claim refunds on input taxes. Special schedules define what is considered a deemed supply, such as transfers between related parties without payment, while other activities, like certain court services, are treated as non-supplies. Every GST transaction rests on 3 fundamental pillars: time, place, and value. The time of supply determines when your tax is due. Generally, the law considers the earliest date among the invoice, the required invoice date, or the payment receipt date. For goods, the place of supply is determined by the location where the delivery or installation occurs, which helps distinguish between intrastate and interstate transactions. For services, the general rule is that the recipient's location dictates the place of supply. However, special rules apply for real estate, where the building's physical location is the deciding factor. The transactional value acts as the base for tax calculation. It is calculated by taking the base price, adding taxes, incidental expenses, and late fees, then subtracting any government subsidies. To summarize, completing a GST transaction involves 4 steps: identifying the supply category, determining the time, locating the place, and calculating the value. By mastering these fundamentals, you can accurately determine tax liability and apply GST law effectively in your operations.